Very good morning, everyone. I hope you all must be doing great. Guys, today I'll be discussing a important question from your RTP. This question I have taken it from your revisionary test paper issued by the Institute for September 2024 examinations. Why this question is quite important? Reason being, see, residential status is one of the chapter which is easier than other chapters, first of all. Second thing is that it is one of the most important chapter of our syllabus. If I talk about from the examination point of view, in fact, this is examiner's favorite chapter. Always you see that there is a question from this residential status. Second thing is that this question, if you will be able to do this question, you will be able to revise so many concepts related to residential status. That is why this is making the question more important. Okay, let me discuss this with you. Mrs. Sarika, an Indian citizen, is in employment with an overseas company located in UAE. So she works with a Dubai company, I believe. Okay. She is not liable to tax in UAE. She is very important line. She is not liable to tax in UAE. Okay. During the previous year 23-24, our previous year, she comes to India for 121 days. Good enough. She was in India for 50, 100, 76 and 145 days in the financial year this. Actually, they have given the information of last 4 years. Okay, let me sum it up. 50 plus 100 plus 76 plus 145. 50 plus 100 plus 76 plus 145. 371. Okay. Her annual income for the previous year 324 is as follows. So we have given some information regarding her income. Cool enough. Mrs. Sarika has opted out of the default tax regime. She is not opting 115 BAC. She has opted out. That is optional tax regime. From the information given above, okay, they have asked 3 questions. So this is more important. You should know what the examiner is exactly asking from you. So it says you are required to determine the residential status, okay, and total income of Sarika for assessment year 24-25. So we need to determine first of all the residential status. Second thing, the total income. Okay, got it. Second question says, what would be your answer if the income arising and received in UAE from a business setup in India is 10 lakh instead of 5 lakh? Okay, there is something given as 5 lakh. They are saying we have to repeat our answer, but they have changed the certain facts. They say that if this is not 5 lakh, if this would have been 10 lakh, then what would be your answer? So we have to give the same, we have to find the same residential status and total income, but the facts are now changed. Okay, we'll calculate this. Third is in continuation to point number 2. Okay, that means that we have to take this income is 10 lakh. Okay. In continuation to point number 2, what would be your answer if Mrs. Sarika comes to India in previous year 22-23 for 45 days instead of 145 days? Okay, they are reducing the number of days also here. So we got a rough idea that the question is regarding the residential status and they are asking us to tell the total income. Got it. So we understand, first of all, if I just recap you those concepts. First of all, we understand that individual, she is an individual and individual is said to be resident during the previous year if that person satisfied either one of the 2 basic conditions. So we know that there are 2 basic conditions. What are those? The assessee should be in India during the previous year for at least 182 days or more, or if that person is not satisfying this 182 days condition during the previous year, then we have to check whether at least 60 days or more plus 365 days or more during last 4 preceding previous years. Got it? Are you able to revise this particular concept? And if any of the conditions get satisfied, we say that the individual is now a resident. Then further we have to check whether the person is a ordinary resident or a not ordinary resident. For that we have additional conditions also, right? So first of all, they are asking us to determine the residential status. Okay. One of the most important thing, if you remember, that there are certain assessee, especially Indian citizen. For them, we don't take this condition. We only take 182 days conditions. Who are those? Indian citizen who went outside during the previous year for employment outside. If they are going for employment outside, okay. Indian citizen who is a crew member of an Indian ship. For them, we don't take 60 days condition. We only take 182 days condition. And the third one, which is important here, if a person is an Indian citizen or a person of Indian origin and he comes to visit India, right? He comes to visit India, then also we do not take 60 days condition. We only take 182 days condition. Got it? So she is an Indian citizen and she is working with UAE company. I believe that for a very long time, because it is not given that she has been outside India this year. She is working outside and she comes to visit India only for 121 days during this year. Please understand, 60 days condition will not be applicable to her, right? Why not? Because she is an Indian citizen and she is just coming to visit India. So 60 days condition would not be there. She is falling under one of the exception. So we have to apply 182 days condition. And since this is not getting satisfied because she was there just for 121 days, so we can say that she is a non-resident. We can say that she is a non-resident. However, now you have one more condition over here, that in case a person who is coming to visit India, a person who is an Indian citizen or a person of Indian origin and who comes to visit India, please remember this thing, this is important. And if that person, other than foreign sources income, other than foreign sources income, guys, in other words, I can simply call it Indian income, Indian source income. See, other than foreign sources, what is other than what is foreign sources? We understand, which is related to outside, and other than foreign sources, which means opposite of that, that is which is related to inside. Inside means in India. So although in your exam, law uses the word, the law languages other than foreign sources, they don't use Indian source. But to explain it to you, I'm using this word Indian sources income. But I would request you that in your examination, please write other than foreign sources. What it is, nothing, it's actually Indian sources income. But please in your examination, write other than foreign sources income. Okay. So first of all, tell me, what is Indian source income or other than foreign sources income? That is coming from India. Correct. It's not very difficult. Indian source income means which is coming from India. So in other words, I can say that any income which arise in India is an Indian source income, or in other words, other than foreign sources. Any income which is not arising, but it is received in India, any income which is received. And when I am mentioning arising, it is deemed to arise is also included. When I am mentioning received, deemed to be received is also included. So any income which is arise or deemed to arise in India, any income which is received or deemed to be received in India is an Indian source income. Also, the third one is important. Any income, although it is not arising, although it is not getting received in India, however, it is controlled from India. Let's say if any income is arising outside, any income is getting received outside also. But if it is controlled from India, then also it comes under this definition. So if it is controlled from India. So now what we have to see, the assessee's this income. If this income is more than 15 lakh rupees, if this income other than foreign sources, in other words, Indian sources income is more than, right, his total income, gross total income or the total income? The total income is more than 15 lakh rupees. Then in that case, let me repeat the entire provision. If this is a person, the person is an Indian citizen or person is an Indian origin. Person is an Indian origin person. Person of Indian origin. Okay. Indian citizen or person of Indian origin. If he comes to visit India, if he or she comes to visit India and their foreign, other than foreign sources income is more than 15 lakh rupees, which income, total income is more than 15 lakh rupees, then we have another provision. Then 182 days condition, and the second condition, this 60 days will become 120 days. Then we have to see whether that person is here in India for at least 120 days during the previous year and at least 365 days or more in the last 4 preceding year. So I believe that one of the condition is getting satisfied because her stay is in India is 120 days or more, 121. And in last 4 preceding year, we have calculated it. It was more than 365, right? It was 371. So 120 days condition, if it would be applicable to our assessee, then this assessee is satisfying this condition. So first of all, we need to calculate whether her Indian source income, other than foreign sources income, is it more than 15 lakh rupees or not? Let me calculate this. See, the details of income are given over here. Salary accrued or arisen in UAE. This is neither arising in India, nor received in India, nor it is controlled from India. So this is not an Indian source income. We don't have to consider this. Okay. Income accrued and arising in India. Yes. Income deemed to be accrued or arising in India. Yes, Indian source income. Income arising and received in India, sorry, in UAE, neither arising nor received in India, it is in UAE. However, from a business setup in India, that means it is controlled from India. Yes, it is considered to be other than foreign sources, Indian source income. Life insurance premium paid by check in India. This is not an income, this is an investment, and you can take a 80C deduction. Why? Because they have mentioned that the assessee has opted out from the default tax regime. So we understand if the assessee is opted out from the default tax regime, there is no restriction in chapter 6A, they can take any deduction which is available to them from 80C to 80U. So 80C would be available to them 1 lakh rupees. So let me find her other than foreign sources income. In simple words, Indian source income. 2 lakh, 7 lakh, 5 lakh. 2 plus 7 plus 5. How much it is? It will become 14 lakh, right? Yes, it will become 14 lakh. So is it less than 15? No, please don't compare 14 lakh because we have to take the total income. The total income should be more than 15. Although in fact, the GTI is also not more than 15. I can stop here, but practically, but I have to see the total income. So if I subtract 1 lakh from it, because we have to see the total income, that is the Indian source income, it will be 13 lakh. Now we can say that since it is not exceeding 15 lakh rupees, so this 120 days provision will not be applicable to RSSC. So 120 days condition can only be applied if the other than foreign sources income, the total income exceeds 15 lakh. So here it is not getting exceed 15 lakh. So this 120 days condition will not be applicable to her. 60 days condition also would not be applicable. Reason being because she is coming under the exception. She is coming just to visit India. So only 182 days conditions can be applied. But now she is not here for 182 days or more. So she will become non-resident. So first answer would be the residential status. She will become non-resident. And when she is becoming non-resident, which income would be taxable? We understand non-resident has to pay tax on any income which is arising in India, any income which is received in India, and any income which is not arising nor getting received. Even if the business is controlled from India, if the person is a non-resident, that person is not required to pay tax on such income, even if it is controlled from India. So here the total income would be, see, 15 lakh, we will not take. This is not arising in India. 2 lakh we can take arising, 7 lakh deemed to arise, okay, we can take 2 lakh, 7 lakh. 5 lakh, no, we will not take. Why? It is not getting arising, it is not arising, nor getting received in India, so we will not take, even if it is controlled from India, because she is a non-resident, right? She is a non-resident, that is the reason we are not taking it. If she would have been not ordinary, then we can take it, controlled from India. But now she is not even not ordinary, she is a non-resident, so we cannot take this income. So the income would be 9 lakh minus we can give a deduction of 1 lakh rupees or ATC. So the income would become 8 lakh. So her income will be 8 lakh. You got this answer? Now the main issue is that how we will going to present this. See, presentation is very easy. I always say that first of all, please write the provisions in your own plain English language. Not necessary that it should be in a very strict legal language. No, in your own plain English language, write the provisions and then connect those provisions with your answer. So if I have to write this, I'll simply write, see, they are asking that determine the residential status. And then we have to compute the total income. So first target this answer. First, you have to write the provision. An assessee becomes resident. So you can mention first the basic condition. Then mention the exception. Please do not mention all the three exceptions. Only that one which is related to this particular question. Then mention that since she is an Indian citizen and she is coming to visit India, 60 days condition would not be applicable. Only 182 days condition will be applied. Next line. However, you are still writing the provision. However, if the other than foreign sources income, please don't write Indian source income, write this way, other than foreign sources income is more than 15 lakh, then we have to see 120 days condition also. Then please go and calculate other than foreign sources income. And since it was just 13 lakh, we have just calculated it, it was just 13 lakh. So now you can say, safely say 120 days condition will not be applicable to her. So only 182 days condition can be applied. And since she was not there for 182 days, therefore she will be a non-resident. So first you have answered this question that she is a non-resident. Then calculate the total income. Considering that she is a non-resident, then you can calculate that 2 lakh would be taxable, 7 lakh will only be taxable, and give a deduction of 1 lakh. So you will get 8 lakh rupees. I believe that you got this. You'll be able to answer this, correct? Okay. Second, what would be your answer if the income arising and received in UAE from the business set up in India is 10 lakh instead of 5 lakh? Okay. Now when you will be answering this point number 2, please do not repeat those provisions again, because you have already presented it to the examiner. Now examiner already knows that student knows that provision. So there is no need to repeat those provisions again. If there is any other new provision which is applicable, then go and write it. But if you have to write the same provision, then it is not recommended to write it again. Correct? So in this case, we don't have to write the provision because we have already written in part number 1. So simply we can give the answer. If this income would have been 10 lakh, see, this 5 lakh would not be 5 lakh if this would have been 10 lakh rupees. Okay. Then other than foreign sources income would be how much? 2 plus 7 plus 10. It will become 19. Minus 1 lakh, it will become 18 lakh, which is exceeding 15 lakh rupees. So now 120 days conditions can be applied to this assessee. So since she was here for more than 120 days or more, yes. And in the last 4 preceding years, 371 days. So now she is satisfying the second condition, 120 days condition, right? So she will become resident, right? She will become resident. Now we have to check ordinary or not ordinary. Should we check those additional conditions, 730 days or in last 10 years, out of those 10 years, she should be resident in 2 years? No. If you are applying 120 days condition, that is the other than foreign sources income is more than 15 lakh rupees. In that case, you don't check those additional conditions, 730 days and so, right? In that case, you only check if she is here in India for 182 days or more, she will become ordinary. If she is less than 182, then she will become not ordinary. So here, she was here for just for 121 days. So she would be a not ordinary resident. So in this answer, in the first one, she was not non-resident, but in this answer, she will be resident, but not ordinary resident. Got it? She would be resident, but not ordinary resident. And if she is a not ordinary resident, now again, you have to calculate the total income. So the total income would be 15 lakh is not arising in India. She is a not ordinary resident, right? So income which is arising in India, deemed to arising in India, even if it is not arising, but it is controlled from India, because now she is a not ordinary resident. So controlled from India would also be taxable. 2 plus 7, and now we are taking it 10. 2 plus 7 plus 10, 19 minus 1, 18 lakh would be your answer over here. So your answer here would be 18 lakh. Got it? The third one. In continuation to point 2, what would be your answer if Mrs. Sarika comes to India in previous year 22-23 for 45 days instead of 145 days. Okay. So they are saying in previous year 22-23, she was for 145 days, and now they are saying that in last 4 years, one of the year was 22-23. If this would have been 45 days, they have deducted 100. Initially it was 145 and now they are saying just 45. So in the last 4 years now she will be 271 days. Okay. Although her income, because we are continuing it from point number 2, so we have to take it 10 lakh. Although now her foreign sources income is more than 15 lakh rupees, but you will not be able to apply 120 days condition. Why? Because 120 days condition should be satisfied along with 365 days also. But in last 4 years now our number is reduced, so 120 days condition will not be applicable. So we can say that 120 days condition is not satisfied, so she is a non-resident. No. Please remember, there is one more important line in this question. She is not liable to tax in UAE. So we have another section. If you can quote the section number, that is fine. Even if you don't remember the section number, it's perfectly okay. Section 6(1)(a), it says about the deeming provision, that deemed resident you can become. It says that if the assessee is an Indian citizen, person of Indian origin also, no. In that provision, it says that if the assessee is an Indian citizen and if the other than foreign sources income is more than 15 lakh, provided the assessee is not liable to tax in any country or any territory, then if that person is deemed to be a resident. And which type of resident? Not ordinary. So here that provision would be applicable, and please apply those provision. Now to answer this, first write those provision, that although her stay during the last 4 years is less than 365, but still, since the assessee is not liable to tax in any country, so the provision would be applied that she will be deemed to be a resident but not ordinary. So again she would become a resident but not ordinary, and here deeming provisions will apply. Deemed resident but not ordinary. And again, what type of, now she is again a not ordinary, what type of income would be taxable? Same, 2 lakh, 7 lakh, and now here we are taking 10 lakh. So it would be 19 minus 1, 18 lakh. Got this answer? So this was quite an important question, because this question contains many of your provisions which are related to residential status. I hope that you find this video useful and you will now be able to do this particular type of questions if they will come in your examinations. Correct? Now let's meet in another video. Till then, thank you so much. Bye bye and take care. All the best. Keep studying.